Hello, hello everyone. Good morning, good afternoon, good evening, depending upon when you are watching this video. In the earlier sessions, we discussed about clubbing of income. What is the rationale behind the concept of clubbing of income, and what are the sections in which the provisions related to clubbing are contained, that is between section 60 to section 64. And also we started the discussion and completed the understanding of provisions in relation to section 60, 61, 62 and 63. Section 60 was talking about the transfer of income without the transfer of asset. Only income is transferred, but asset is not transferred to anybody by any person, in which case it doesn't matter whether that transfer is revocable or irrevocable. That was section 60. Then section 61 was about transfer of assets but not income. Transfer of assets by any person to any other person, but income arising from such assets shall be clubbed in the hands of transferor. When is that? If that transfer is a revocable transfer of assets. That was section 61. Section 62 was talking about exceptions to section 61, wherein the clubbing provisions are not attracted even in case of revocable transfer. When are those not attracted? Of course, particularly when the revocation, the reversibility of the transfer does not happen during the lifetime of the beneficiary. In other words, the asset might come back to the transferor, but only after the death of the beneficiary or transferee. If that is the case, clubbing provisions do not apply. Also, if the transfers are made before 1/4/1961 with a period of at least 6 years, then if it is that case, also that transfer is not considered for clubbing under section 61. Even though they are all called as revocable transfers, still section 61 does not apply to those two exceptions. A second exception is anyway exceptionally exception, because before 1/4/1961 means it's a very long back transaction, but mainly for examination purposes this is where it will be useful. If the transfer is done where the revocability of such a transfer cannot happen during the lifetime of the beneficiary or transferee, then though it is called a revocable transfer, it will not get attracted to section 61, means no clubbing provisions will be applicable for such an exceptional case. Then coming to section 63, which has only defined what is a revocable transfer, is a simple understanding. Revocable means retransfer of the assets or incomes, either wholly or partly, either directly or indirectly, back to the transferor. Again coming back to the transferor. Or if the transferor gets a right to reassume the power over the income or the asset, once again, either directly or indirectly, whether in whole or any part of that income or assets, if the transferor gets a right to reassume power on that in future time, then also such transfer is called as revocable transfer. But there was a very important twist point which you have to remember. Whereas there is a possibility of a transfer being called as a revocable transfer even if the asset or income is transferred partially. Even if the asset or income is transferred partially, still it can be called as a revocable transfer as per the definition of section 63. We know that. However, even though the revocable transfer was partial, clubbing is not partial. The clubbing will be done for entire income from such transferred asset. So that is the variety. So even though only part of the asset is transferred by transferor to the transferee, still income generated from that asset shall be included in the income of the transferor fully, not to the extent of asset that has been revocably transferred to transferee. So that is the point here. To sum it up, the revocation may be partial, clubbing is never partial, clubbing is in full. Entire income of the asset should be includable in the total income of transferor. That was another very important point as an extension of section 61 and 63. 60 doesn't have to worry about all this because it doesn't matter whether the transfer is a revocable transfer or irrevocable transfer. These are the sections ranging from section 60, 61, 62 and 63. 60 is a clubbing provision, 61 is also a clubbing provision, 62 is actually an exception to 61, which is not a clubbing provision, which is asking not to club actually, but still that is also related to whether or not some income to be included in the income of the SSC. So 60, 61 are directly clubbing provisions, 62 is an exception to the clubbing provision, but 63 is not a clubbing provision, rather it defines what is a revocable transfer. So 63 is a sideline provision, we can say. The core provisions that we apply will be 60, 61 and 62. 63 is also useful. Why? Only to understand, only to define what is a revocable transfer. And why is it important to know what is a revocable transfer? Because 61 talks about clubbing of the income which has been generated from an asset which has been revocably transferred. That is why definition of revocable transfer also becomes important. But once again, no need to by heart any of these things. You need to remember the keywords, of course, yes. You need to use these words, revocable, irrevocable. All these words have to be used, definitely, no doubt. You cannot use the word reversible and all. Whatever the law has used, that word only we have to use. However, that does not mean you have to by heart these definitions. There is no such need. Understanding of these items is enough. So understand the major difference between 60 and 61. 60 is about transfer of income without transfer of asset. 61 is about transfer of asset, but such transfer is a revocable transfer. That is the point. And what has to be clubbed? What has to be clubbed is always the income that is generated from such transferred asset. And in whose hands it has to be clubbed? Obviously in the hands of transferor. Who might be really earning that income? Probably the transferee. That doesn't matter. Still, that has to be clubbed in the hands of transferor. So that is about 60, 61, 62 and 63. Now, the common point in all those sections earlier related to clubbing is there is no need that the transferor and the transferee should be relatives. There need not be any kind of relationship between transferor and transferee. So, irrespective of who is a transferor and who is a transferee, all those sections 60, 61, 62 and 63 are applicable normally. Now when we move on to section 64, of course there are so many subsections and clauses in this section 64, you don't need to remember all of that, but in general you can remember section 64 in relation to clubbing provisions of somebody who is a family member of the SSC. And what kind of family member? Not anybody. Only three kinds of family members are covered under section 64 whose income will be clubbed in the hands of the SSC. And who are those people? 1 is a spouse, 2 is a son's wife, 3 is a minor child, whether girl or boy. So these are the three areas of clubbing which are applicable in relation to income earned by somebody which have to be included in the income of SSE. And first such case arises in the case of spouse. So what are we talking about here? Income of other persons includable in the individual's total income. That's what is clubbing, right? So clubbing of income arising to spouse. So what is the provision related to clubbing of income? Income is arising to spouse. Who is earning the income is spouse. But still that income is taxable in the hands of the SSE. Why is that? How is that? Under what circumstances that happens? Let us look at that. So what is the provision here? Simply speaking, this is what exactly you should remember and write. What has to be clubbed? What type of income has to be clubbed in the hands of the SSE, even though the income is earned by the spouse of the SSE? And who is earning income? Always be clear. Income is earned not by the SSE. Income is earned by spouse of the SSE. But in whose hands such income is taxable? In the hands of the SSE. Why is that? Because clubbing provision of section 64(1)(2) is applicable. And what does it say? Income by way of remuneration from a concern in which the individual has a substantial interest. So this name, we might be already aware of it. When can we call a person is having a substantial interest in an organization? We should know that already. We have defined it earlier in the beginning sessions of basic concepts and definitions earlier. What is a substantial interest? Substantial interest is that where any person holds at least 20% of the voting right or 20% of ownership in an organization, or you can call it 20% of profit share in an organization. If it is company, if the person is holding at least 20% of voting rights by holding equity shares, then we say such a person is having substantial interest in such organization. Understand very clearly who is having substantial interest. Individual is having substantial interest. And who is this individual? He is our SSE. So our SSE is not any person here. Any person cannot have spouse. Only individual can have spouse. That is why SSE is here an individual. And what is that individual having? He is having a substantial interest in a concern, means an organization. And what that organization is doing? It is giving remuneration to whom? To the spouse of this individual. And if such thing happens, that remuneration received by the spouse of the SSE will be deemed to be the income of the SSE himself, and it will be clubbed in the total income of SSE. That all things are in essence conveyed by this provision. So income earned by the spouse of the SSE by way of remuneration from a concern in which the SSE is having substantial interest should be clubbed in the hands of the SSE. Why is that? Because imagine a situation where the SSE is having an organization, he has a business himself, and for various reasons he wants to reduce the profit of the business to be shown for the income tax purposes. For that, what he can do is, one, increase the expenditure. He can increase the expenditure by really giving some money to somebody else, then there is no problem with that. But if he increases the expenditure by giving a salary, though it is not really done, but just for the record's sake, he might show in the books of accounts of the concern that there is some salary or remuneration given to the spouse of that individual, and that will be shown as an expenditure in the books of the concern. So naturally that concern has got deduction for such expenditure. On the contrary, the spouse of the person who, at least on record, who is told to be receiving this money might not be paying any tax also, because that may be very well below the basic exemption limit, or even if it is above the basic exemption limit, the tax payable may be very less. So if an individual is having a substantial interest in a concern, and that concern is paying remuneration to the spouse of the individual, then the amount of remuneration received by the spouse shall be included in the income of the individual. We are not talking about the concern, we are talking about the individual here. But what is that concern here? That is organization in which individual has substantial interest. That's what is mentioned here very simply. These are all just R things in law. Those will be there anyway, so don't worry too much about them. This is simply remuneration in cash or kind to the spouse from a concern in which the individual has substantial interest to be clubbed. And what does the provision say? In computing the total income of any individual, all such income which arises, once again same, directly or indirectly, to the spouse of such individual by way of what? Whatever name you call it salary, commission, fees or any other form of remuneration. Should it be in cash or kind? Either way, whether cash in or kind. Or from a concern where is that remuneration received in which such individual has a substantial interest, it shall be included where? In computing the total income of any such individual. So all of this in essence just can be understood in one line. In what is that line? This income by way of remuneration from a concern in which the individual has substantial interest shall be clubbed with the income of such individual. So that is what is one of the very important aspects in relation to section 64. So now look at the situations here which are given very simple way and summarized way. What are the circumstances when the individual is deemed to have substantial interest in a concern? This we know already. If the concern is a company, when can we say the individual is having a substantial interest? When if he is carrying equity shares of 20% or more. That is voting power. If they are beneficially owned by such person or partly by such person and partly by one or more of his relatives at any time during the previous year. So not necessarily the SSC himself should hold equity shares of worth 20% or more in the company. Even if the beneficial ownership of such 20% is held partly by such person or partly by one or more of his relatives also at any time during the previous year, not necessarily at the 31st March of end of the previous year. So if during the previous year at any time the SSC has substantial interest either alone or jointly with any of the relatives, then we can say that SSC is having a substantial interest in the company. So that is what is substantial interest all about. And in the company, what we look at 20% of voting power. Voting power naturally comes from equity shares. What about other case? Other case it is easier. If such person is entitled or such person and one or more of his relatives are entitled in aggregate to receive, once again same, how much? 20% or more profit of such concern at any time during the previous year. So in case of company, we use the word voting power. In case of any other concern, we use the percentage of profit share. But point to be noted in both cases is this 20% can be either held singly by the SSC or jointly by SSC plus any of his relatives. So even if the SSC is holding directly or indirectly, either himself or along with some of the other relatives of his family, in all those cases that SSC is said to be having substantial interest in that company. That is the definition of substantial interest. By having substantial interest, nothing will happen. Nobody is barring anybody to have substantial interest. Every organization will have somebody definitely who is having substantial interest. Imagine a partnership firm, 3 partners are there, each of them sharing profits and losses equally. As an example, let us say each of them is getting 1/3 share, means what? Everybody is having substantial interest in that partnership. So any organization, whether it is a firm or a company or any other organization, will definitely have some people who are having substantial interest. How to identify them? Check the 20% criteria. 20% of voting power or 20% of profit share. Once that is checked, we will come to know, yes, this individual is having substantial interest in that organization. Okay, so what? Then you have to check whether that organization has paid any money in the form of remuneration, salary, by whatever name called, commission, fees, by whatever name called, whether in cash or kind, and to whom this organization is paying such remuneration, to the spouse of this particular person who is having substantial interest. In that case, though on record it is mentioned that spouse of this person has really earned the income, the law presumes that such income has been earned by the SSC himself. That is why clubbing provisions are applicable in such cases. Now the question comes, particularly when it is related to this relatives, because both of these have used the word relatives, whether it is related to the company or whether it is related to any other organization. Why is this important? Since the individual we are talking about here can hold 20% either by himself fully or by jointly with along with other relatives. So the term relative is important. So who is a relative here? Relative is husband, wife, brother or sister or any lineal ascendant or descendant. That's all. This cannot be clubbed with any other definition of family or relative in the Income Tax Act. Please be very clear. The meaning of relative may be completely different in other places. For example, if you look at gift provisions under income from other sources, the relative definition is completely different there. You have to apply that definition for that provision. For this provision, what is the definition of relative? Simple. Husband, wife, of course. Spouse will be definitely relative. Brother, sister, not cousins. Only brother, sister. Siblings we are talking. Lineal descendant includes parents and grandparents. Lineal descendants include children and grandchildren of that individual. All of them are called relative. That is section 64, 1, 2. That is about clubbing of the income of spouse earned by way of remuneration received from an organization wherein the SSC is having substantial interest. That is the clubbing provision. Now let us look at the exceptional cases or different situations. These can be just easily understood. One of the very important things you need to observe also in the examination problems. This is an exception. The clubbing provisions will not apply where the remuneration is received on account of technical or professional qualifications. So that is a very important point. Where this remuneration is received on technical or professional qualifications. So just now we had a very strict clubbing provision wherein it says the organization is paying some remuneration to the spouse of the individual who already has a substantial interest in that organization. Immediately we have weakened that provision by telling that what if that spouse is really having a technical or professional qualification, then also should the clubbing provisions be applicable? Then no, then they will not be applicable. Then naturally for us it is a question, as sir, how would we know that whether he or she, the spouse of the SSC, has technical or professional qualification? Naturally it has to be given in the question. It has to be given in the question. If nothing is given, assume that spouse of the SSC does not have technical or professional qualification in order to do that job. So lot of words are used here. So practical purposes, this entire provision goes for toss, because the word here used is the clubbing provisions will not apply when the spouse of that individual possesses technical or professional qualification and the income to the spouse is solely attributable to the application of his or her technical or professional knowledge, see this, or experience. So experience, anybody can say that I have experience. And for practical purposes, can anybody really define somebody has a knowledge or not? Both are not possible. So what is a technical qualification for a job? That also nobody can tell. Imagine the spouse of an individual has completed BCom. He or she may be appointed as CFO of the business in which SSC himself is the owner and CEO. Namesake, we don't know whether it is seriously correct or only namesake. That we cannot investigate. That is none of our business. But the point is, the spouse of the SSC has a commerce graduate degree. Now, are we going to judge that a BCom cannot become CFO? Is it possible? Not possible. That is why we can say, yes, maybe since he or she is a commerce graduate, at least there is a possibility of him or her to perform the role of CFO. There it will be difficult to prove that the spouse does not have technical or professional qualifications. Why? Because the law has given very big number of names here. One, it says technical qualification, no definition of that. Professional qualification, no definition of that. It says knowledge, who can define knowledge? Experience, Anybody you can say I have experience. So very difficult to prove that somebody does not have technical or professional qualification, somebody does not have knowledge or experience. So for practical purposes, more or less, this clubbing provision is diluted, we can say. However, that is none of our business. What should be we focusing upon? We should think about the examination questions, in which if it is given that the technical or professional qualifications are there for the spouse, then there is no clubbing. If it is not there, then definitely the clubbing provisions will be applicable. So that is about one of the exceptions, major exception to the clubbing provision in relation to remuneration of spouse. Then another point to note here, this is also an important point in the exam questions, it will be there. What if both husband and wife have substantial interest in the concern? That is also possible. Then that is also another variety situation. Imagine husband also has say 50% share in the organization, wife also has, let us say, 40% share in the organization. Both are having substantial interest. So can we say that income has to be clubbed with always in the hands of husband, something like that? Not possible. I already told you, you cannot be gender discriminatory as far as this chapter is concerned. Then what should happen? The law will tell us without any ambiguity, where both husband and wife have substantial interest in a concern and both are in receipt of income by way of salary, etc. from the said concern, then such income shall be includable in the hands of that spouse whose total income excluding such income is higher. So what we have to take there? We have to first of all see, other than clubbing such income, whose total income is higher. If it is husband's income higher, clubbing will happen in the husband's hands. If wife's income is higher, it will be happening in the wife's hands. In the sense, the SSE, who is the SSE in these cases? We don't know that till we find out who is having higher income. So where the clubbing provisions are to be applied, we will not come to know until and unless we know their total incomes. Of course, excluding the income that they are receiving by way of salary, remuneration, etc. From where? From an organization, both of them have substantial interest. So here what is happening, understand the case clearly. Both husband and wife have substantial interest, both of them receiving salary. That is a problem. So if both are having substantial interest, both are receiving salary, of course we have to check whether they have technical or professional qualifications, knowledge or experience. If yes, we don't need to worry about clubbing at all. If no, then we have to club such salary or other remuneration or other incomes in the hands of whom? In the hands of that person whose total income before such income is higher. That is the provision related to special case where both of them, husband and wife, having substantial interest, at the same time both of them are receiving remuneration from that organization where they are having substantial interest. That is the point to be noted. And now note the another important point here, whatever is there in the box in general is going to be very important because these are twist points. Where any such income is once included in the total income of either spouse, income arising in the succeeding year shall not be included in the total income of the other spouse unless the assessing officer is satisfied after giving that spouse an opportunity of being heard that it is necessary to do so. What does this mean once again? Are we going to do all this exercise every year? Every year looking at, let us say, there is Mr. A and Mrs. A. In 1 year, let us say Mr. A has higher income and Mrs. A has lower income. So because of that, Mrs. A's salary has been clubbed in the hands of Mr. A. Already that happened once. Next year also we will check who has lower income, who has higher income. Answer is no. No need to check. Means what? Once, if it is included in the income of either of the spouse, in that case, income arising in the succeeding years shall not be included in the total income of other spouse. Means it should be still continued to be included in the income of same spouse. Imagine in the same example what we have taken, Mrs. A's income is included in the income of Mr. A. If that is the case, next year also same will happen. Mrs. A's income will be included in the income of Mr. A. Once again be very clear. Are you talking about entire Mrs. A's income? No, 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 not entire Mrs. A's income. What type of income that Mrs. A is getting here? That is remuneration she is getting. From where? From an organization where Mr. A also, Mrs. A also, both have substantial interest. And Mrs. A in this case did not have professional qualification. Then only clubbing provisions were applicable earlier. Then only Mrs. A's income was earlier clubbed in the hands of Mr. A. Once that happens, the same thing will continue, is what this box is telling us. This need not be changed. Of course, it can be changed when, if the assessing officer is satisfied that it has to be changed. Otherwise, it will be continued to be same. Means what? If there is a clubbing that has started in a year from one spouse's income to another spouse's income, the same clubbing will continue in future also. Every year there need not be a separate checking whose total income is higher before clubbing. That need not happen. Of course, if it really happens, if the assessing officer is really convinced that no, this clubbing is not correct for this year, the clubbing should have been done otherwise, then assessing officer can very well do. But without the interference of assessing officer, under normal circumstances, whenever a clubbing happened from one person to another person, one spouse to another spouse, the same direction of clubbing will continue in the next years also. That is another point to be noted. That is section 64(1)(2), clubbing of income arising to spouse. Now, when this has to be clubbed? When the spouse receives remuneration from an organization where the assessee has substantial interest. What is substantial interest? We should be very clear. 20% of voting right or 20% of profit share. Then, what are exceptions to this clubbing? If the spouse is having technical or professional qualifications. What if both husband and wife have substantial interest and both are receiving remuneration? Then the income shall be clubbed in the hands of such a spouse whose total income is higher before doing this clubbing. And once that is done, the same clubbing will continue in the future years also. That's it. That is section 64(1)(2) relation to spouse's income includable in the assessee's total income. Now let us look at some of the illustrations carefully. Illustration 2 that has been given here. Read it carefully. Mr. A holds shares carrying 25% voting power in X Limited. So X Limited is the organization in which Mr. A holds 25% voting power. So automatically we can say Mr. A is having substantial interest in X Limited. Then Mrs. A, naturally Mrs. A is somebody I don't know, you cannot say. Mrs. A, as the name indicates, is the wife of Mr. A. He is working as a computer software programmer in X Limited. So she has a job in X Limited, and X Limited is that organization wherein Mr. A already has substantial interest. Of course, at a salary of 30,000 rupees per month. And who is getting this 30,000 rupees? Mrs. A. She is working. As per record, whatever it is she really working? Does she know really computer? That is none of our business. That will be given in the question. So as far as the official record is concerned, she is working as a software programmer in X Limited at a salary of 30,000 per month. She is, however, not qualified for the job. It has to be given in the question, otherwise you don't know. If nothing is given, you assume the same thing, that the spouse is not qualified for the job. Means what? Immediately what should strike in the mind? Clubbing provisions are applicable or not applicable? Answer is yes. Clubbing provisions are applicable. Means what? Whatever remuneration received by Mrs. A shall be clubbed in the hands of income of Mr. A. That should be the application of provision that we already know. In addition to this, the other income of Mr. A and Mrs. A are like this. So Mr. A has a 7 lakhs rupees other income and Mrs. A has 4 lakhs rupees other income respectively. Compute the gross total income of Mr. A and Mrs. A for the assessment year 2000-2001. So simply that is a question. Now understand this very carefully. Normally Mr. A has only one income as per this information. So this is where you have to be very clear. You cannot say, or maybe he has other income. Whatever is given in the question, that incomes only they will have. We cannot say about the incomes that we don't know about. So what is the income of Mr. A in this question? Only 7 lakhs, which is other income. Whereas Mrs. A is having two types of incomes. One is this salary, 30,000 per month, and 4 lakhs other income. So let us take Mr. A separately, that is 7 lakhs, and Mrs. A separately, that is 4 lakhs plus 3 lakhs 60,000. However, also keep in mind, you have to always keep in mind salary. Since it is a salary of 30,000 per month, which is a gross amount here, we need to give standard deduction under section 16(1)(a). How much is that? Up to 50,000. So from 3,60,000, if you deduct 50,000, what is the income from salaries of Mrs. A first of all? That is 3,10,000. However, 3,10,000 anybody can calculate. Who earned it? Mrs. A earned it. Standard deduction also has to be given for Mrs. A only. Once that income of Mrs. A is calculated, which is coming from salaries, after calculating the income from any head of income, we have to check whether any clubbing provision is applicable. In this case, yes, clubbing provision is applicable. So that 3,10,000 should be clubbed in the hands of who? Mr. A. That is why the computation of gross total income of Mr. A included not only his other income of 7 lakhs, which anyway he has, as per this, he has, Mr. A has 7 lakhs other income, anyway he has that. In addition to that, the salary income of Mrs. A also to be clubbed in the hands of Mr. A, that is 3,10,000. Calculation happens like this: 3,60,000 minus standard deduction of 50,000, 3,10,000. So what is the gross total income of Mr. A? 10,10,000. Simple. Now what will be the gross total income of Mrs. A? That also I asked. We cannot just ignore only Mrs. A. Gross total income of Mr. A, answer is 10,10,000. Gross total income of Mrs. A is how much? She has only other income of 4 lakhs. Should that also be clubbed? Should that also be clubbed? No need. Nobody said any provision about other incomes. We are talking about remuneration received by the spouse in relation to a job that the spouse is doing in an organization where the SSE is having substantial interest. Then only clubbing is applied. Don't apply clubbing according to whims and fancies. This 4 lakhs rupees is not to be clubbed in the hands of Mr. A. So 4 lakhs rupees will be taxable naturally in the hands of Mrs. A. So the gross total income of Mrs. A is 4 lakhs. That's it. That is the answer for this illustration 2. Now illustration 3 is a continuation only. Will your answer be different if Mrs. A was qualified for the job? Definitely yes. If she was qualified for the job, then clubbing provisions will not apply. When clubbing provisions will not apply, Mr. A will have how much income? Only 7 lakhs he will have, because 3,10,000 will not be clubbed. That will be separately taxable in the hands of Mrs. A only. So Mrs. A will have how much income? 4 lakhs plus 3,10,000, total 7,10,000, whereas Mr. A will have 7 lakhs as gross total income. That will be the answer. So the gross total income of Mr. A in that case will be 7 lakhs, and gross total income of Mrs. A will be 7,10,000. Why? Because Mrs. A is qualified for the job. Once she is qualified for the job, there is no need of applying clubbing provisions. Whatever the income she earns, it will be taxable in her hands only. There is no clubbing that is applicable. That is illustration number 3. 2 and 3 are similar. One case where the spouse of the SSE is not qualified for the job, another case where spouse of the SSE is qualified for the job. That is about a couple of illustrations explaining the application of the provision. Now let us look at one more thing. This is also a kind of question which will tell us about how this clubbing provisions in relation to spouse can be applied. Read the question carefully as usual. Mr. B holds shares carrying 30% voting power in Y Limited. So naturally he has substantial interest in Y Limited. Mrs. B is working as accountant in Y Limited, getting income under the head salary computed. Computed means what? After standard deduction of 3,44,000 rupees without any qualification in accountancy. So she is not qualified in accountancy, but she is appointed as an accountant and she is getting a salary of 3,44,000. Naturally, when nothing is given means it is per annum, and that is after standard deduction. How do we know that? Because the word used is computed. So Mrs. B is working without qualification. So by this time we should know the general understanding of the application of provision. Boss, Mr. B is having substantial interest in Y Limited. Y Limited is paying 3,44,000 rupees to Mrs. B, and Mrs. B income in the form of salary should be clubbed in the hands of Mr. B. To that extent, by now we can be clear. In addition to this, some other information is given. Mr. B also receives 30,000 rupees as interest on securities, that is naturally the income from other sources. Mrs. B owns a house property which she has let out. This is Mrs. B separately. Mrs. B owns a house property which she has let out. Rent received from tenants is 6,000 per month. This is where some people unnecessarily mix up the provisions. Should not happen. That is why I am warning you. Mrs. B owns a house property means it is her property. Don't bring section 60, 61 and all that nonsense. There is no information about it. It is her property. How she got it, that is none of our business. Whatever the information given in the question, to that extent only you have to look at. She owns a house property, yes. And she is receiving rent, yes. How much? 6,000 per month. So there is an income from house property in the hands of Mrs. B for sure. How much is that? That we have to calculate. So simply speaking, what is the gross total income of Mr. B and Mrs. B if we want to calculate? Gross total income of Mr. B will be 1. His own income, that is 30,000 rupees in the form of interest on securities, that is income from other sources. Also income from salaries, though it is not related to him, but it is still taxable in his hands since clubbing provisions are applicable, as his wife is not having any qualification in accountancy but still receiving salary from a company in which he has substantial interest. So what will be the taxable salary or gross total income, let us say, of Mr. B? One is 3,40,000, which is a clubbing provision, and we don't have to give standard deduction separately since this salary income is already computed. Income from other sources, that is 30,000 rupees interest on securities, also is included. So what is the total or gross total income? What is asked here? Gross total income of Mr. B is how much? 3,74,000. That's it. That is the 3,74,000. Next, how much is the gross total income of Mrs. B? Okay, practically she is receiving this 3,44,000 as salary, but is it taxable in her hands? No. So income from salary is nil for Mrs. B. However, she has a house property on which she is receiving a rent of 6,000 per month. We don't know municipal valuation, we don't know fair rent, we don't know standard rent. So don't worry, all of them we don't require. Automatically how much ever is the gross annual value? 6,000 into 12, that is 72,000. Of course, as you remember, deduction under section 24A will be given. That will be 30% of the net annual value, that is 21,600. So how much is taxable in the hands of Mrs. B, which is only related to income from house property? That is 50,400. How this is computed? Just like any other computation of income from house property, taking gross annual value, since no municipal taxes are given, same will be net annual value. Only give deduction of 30% standard deduction of net annual value under section 24, that is 21,600. So remaining 50,400 is taxable in the hands of Mrs. B. So that is how calculations will be done. So these are all small questions. So 2 to 3 marks questions can be asked like this, or even nowadays even MCQs can also be asked like this. So the answer finally is Mr. B's income is 3,74,000, Mrs. B's income is 50,400. Like this questions can be asked on application of clubbing provisions in relation to spouse. Only one thing, spouse, when she is receiving or he is receiving a salary of any sort from an organization in which the SSC has substantial interest, automatically such remuneration shall be clubbed in the hands of SSC. Simple. That is a provision that has to be applied where the spouse is not having any kind of technical or professional qualification. That's it. That is about one of the things related to income arising to the spouse from a concern where the SSC is having substantial interest. Now let us move on to another clubbing provision, the second one in relation to spouse only once again. So the spouse related one provision is completed. Second provision in relation to spouse is income arising to the spouse from an asset transferred without adequate consideration. May be looking little familiar. Yes, It is familiar to us. Where we discussed this? We discussed this earlier in the income from house property in section 27. But what was there? Only income from house property. Now, what is this section 64(1)(4) talking about? Essence is same, but the property is different. Other than house property, any other asset. So, income is arising to the spouse from an asset, whatever that could be. Asset is a very broader term. But other than what? Income from house property. Why other than income from house property? Because there is already section 27 for that. What was section 27 if you remember? That is called deemed ownership. Deemed ownership sections already we discussed in section 27 under income from house property. Since it is already covered in section 27, again it is not required to be covered here. That is why the word used is other than house property. So where logic is same. There is a transfer of an asset other than house property, directly, indirectly, from one spouse to the other. What is the transfer? How is it happening? Without adequate consideration. Then, otherwise than in an agreement to live apart. So this is one more point here to be noted. Otherwise than in an agreement or connection to live an agreement with. So this is the one. This is another point to be noted. Otherwise than in connection with an agreement to live apart. So this is an exception. When you say otherwise than, which is an exception. So let us just ignore it for some time. How is this to be read? Where there is a transfer of an asset other than house property, obviously, directly or indirectly, it's okay, always it will be there. From one spouse to other, of course, then only we are talking about. But how is the transfer happening? Without adequate consideration. And what is happening? Asset is transferred already, but now what is happening? Any income arising to the transferee spouse from such a transferred asset, either directly or indirectly, shall be included in the total income of transferor spouse. So there are two people, naturally both are husband and wife, and one transferor, one transferee. Who is transferor, who is transferee, we don't care. That could be husband to wife or wife to husband. Either case, one spouse transferred an asset to another spouse. Okay, fine, what is wrong with that? One spouse transferred an asset to another spouse, no problem. But the other spouse, the transferee spouse, has earned some income on that asset. In that case, such income which is earned by the transferee spouse shall be included in the total income of transferor spouse. And what is the exception here? Otherwise than in connection with an agreement to live apart. If they are already in an agreement to live apart, in that case they are already separate. Though there may not be legally divorced, still if there is an agreement to live apart, both of them are considered in the eyes of income tax law also as separate people. No need of any clubbing provision. So exception to this is, if there is an agreement to live apart, logic is no clubbing provision applicable. If there is no such agreement to live apart, normally if one spouse transfers an asset to another spouse without adequate consideration, income arising from such house, income arising from such asset actually shall be included in the income of transferor. Just replace the same provision what we already know, replace that house property with asset, and logic is same. And there is no difference between first point and second point. In the first point it is an asset which is other than house property. In the second point it is only house property which is already there in section 27. So if house property is transferred also, if any other asset other than house property is transferred also, so different sections might apply, but clubbing is common. It is definitely the income arising from such asset or house property shall be included in the income of transferor. That is in relation to transfer of assets by one spouse to another spouse. Transfer of assets is not a problem, but if that asset earns any income, then such income which is actually earned by transferee shall be included in the income of transferor. That is what we already have the same logic in section 27 earlier, that is extended to any asset also, even though it is not a house property. That is the application of section 64(1)(4). Now, another point is there, that is one more thing, income from accretion of the transferred asset. So, if at all there is an income arising on the transferred asset, that is to be clubbed. If there is an income on income, let us understand simply speaking, if there is income on income, then that income on income should not be clubbed. Income from such asset should be clubbed. Income on income should not be clubbed. That is called accretion of the transferred asset. Let us understand with a simple example. Say Mr. A has given or transferred an asset to Mrs. A amount of say 5 lakhs rupees. Cash he has given. Cash is an asset or not? Definitely yes. So definitely that is also part of the definition of asset. So Mrs. A received a cash of 5 lakhs rupees from Mr. A. Of course, if you remember the gift provisions, nothing is taxable in the hands of Mrs. A since she has received it from relative. So no problem as far as taxability of 5 lakhs is concerned. So we are not bothered about that 5 lakhs. Question is not that. That 5 lakhs, actually whatever that 5 lakhs is, that has been, let us say, used for purchase of debentures by Mrs. A. She purchased some debentures of some company and she received some interest, let us say 50,000 rupees in 1 year, 10% interest, 50,000 rupees she received as interest. Is that 50,000 taxable in the hands of Mrs. A or Mr. A? Answer is Mr. A. Why? Because A has transferred an asset which is cash and there is income received from that asset which is interest, and that income received from that asset shall be clubbed in the hands of transferor of the asset, who turns out to be Mr. A. So 50,000 definitely should be clubbed in the hands of Mr. A, no doubt about it. However, that 50,000 once again, once it is kept in the bank account of Mrs. A, received 5,000 rupees interest from, let us say, savings account or some other bank account what she has. This 50,000 is also kept somewhere else or some other deposit she has made. From that, imagine, just for example, she earned another 5,000 rupees. Now the question comes, is that 5,000 also to be clubbed in the hands of Mr. A? Answer is no. That's what we are talking about here in the third point. So the third point is accretion of the transferred asset. It should not be clubbed. If there is an accretion of the transferred asset, there is no need to club. So let us call it this way. It is simply, we can call it like this. This is income on income. This is what it is. Income on income should not be clubbed. That's it. Income on income should not be clubbed. That is the point here. So normally the income from the asset should be clubbed, but income on income should not be clubbed. Simple. Accretion and all these things are different. Understanding of the essence of the point is important. Now, what is adequate consideration? That's okay. Adequate consideration. Is adequate consideration? How do you know whether there is an adequate consideration or not? Definitely it should be given in the question. This also we discussed earlier that court cases have decided natural love and affection do not constitute adequate consideration. So somebody cannot say one of the spouses has rendered so much of affection on the other spouse, in return this asset has been transferred, so clubbing is not applicable because affection is an adequate consideration. That argument is not valid. So simple point again to note is natural love and affection do not constitute adequate consideration. So this is important. They do not constitute adequate consideration. So other than that, if any amount is paid by one spouse to another spouse as proper consideration, that is okay. Otherwise it is inadequate consideration. The moment consideration is inadequate, automatically the clubbing provisions will apply. That is a point to be noted. And there is a very important another point, the transferred asset if it is invested in business. Questions will definitely come from this area. Generally, transferred asset could be anything, but in general, for example, easy understanding purposes, cash. Let us say the SSE, again taking same example of, let us say Mr. A has given 5 lakhs rupees cash to Mrs. A. Of course, cash is an asset, and since Mr. A and Mrs. A are relatives, Mrs. A does not have to pay any tax on that 5 lakhs because it is a gift from relatives. So gift provisions are not applicable, so don't worry about them. Forget about it. Now coming to the other things, these 5 lakhs rupees Mrs. A has invested in a business. So she started let us say a bouquet shop or something like that, and that business is earning profits. Now the question comes, where that profits of the business should be charged? Should they be subjected to tax in the hands of Mrs. A, or should they be subjected to tax in the hands of Mr. A? That is a dilemma. In other cases, like just investing somewhere, putting in bank account, or purchasing debentures, interest earned on that investment, these are all easy things. They can be just like that calculated also, and they have to be clubbed in the hands of transferor. There is no issue. But now what we are talking is a special case where the transferred asset is invested in business. What is the special case here? What also happens in business is not necessarily that the business is having a capital of same amount of money that one SSE has given to the spouse. In our example, Mr. A has given 5 lakhs rupees to Mrs. A, and Mrs. A, maybe she has some savings already. She has added another 3 lakhs rupees and started a business with 8 lakhs rupees, and the business earned a profit, and business earned a profit with a capital of 8 lakhs rupees. So can we say the entire profit that Mrs. A has earned to be clubbed in the hands of Mr. A? That would not be correct. So what should we do? Common sense. Proportionate. Simple. Everything is proportionately to be clubbed. Clubbing will happen proportionately here. Why? Because the transferred asset is invested in business. Now look at the provision very clearly, where the assets transferred directly or indirectly by an individual to his spouse or invested by the transferee, who is the spouse of our SSE, but where that is invested in the business. This is the case. And what is the solution? Proportionate income arising from such investment is to be included in the total income of transferor. So that is the main point of provision here. Case is what? SSE has transferred an asset to his or her spouse. Then such spouse invested that amount in business. Now that business definitely earned some income. That proportionate income arising from such investment should be included in the total income of transferor. What if the investment is in the nature of contribution of capital? Then simply proportionate interest on capital will be clubbed in the income of transferor. So if it is a capital, proportionate interest on capital will be clubbed. If it is just money that is given which has been invested by the transferee and profit is earned from such business, how much profit of such business will be clubbed in the hands of transferor? Proportionate amount has to be clubbed in the hands of transferor. Now again another question comes. How to take that proportion? This is very important. This is how the calculations will occur. How to calculate that proportion? Such proportion has to be computed by taking into account the value of the aforesaid investment as on the first day of the previous year to the total investment in the business, or by way of capital contribution in a firm as partner, as the case may be, by the transferee as on that day. So these other words, additional words, we can just ignore. Capital contribution, blah blah blah, investment, forget about that. Main point here is how to calculate the proportion. We have to calculate the proportion by taking into account the value of the investment as on first day of the previous year to the total investment in business. So for example, in our case, let us say if it is a freshly started business in the same year, 5 lakhs rupees Mr. A gave, 3 lakhs rupees Mrs. A somehow pulled, and 8 lakhs rupees is the capital with which she has started the business. So how much of the profit should be clubbed in the hands of Mr. A? It is 5 by 8. 5 by 8th amount of profit of the business, though it is conducted by Mrs. A, should be clubbed in the hands of Mr. A. That is a proportion of capital on the first day of the previous year, because it is a newly started business. However, if it is not a newly started business, then there will be another issue. What is that issue? We need to calculate both how much that investment has become on the first day of the previous year and how much is the total investment in the business on the first day of the previous year. We have to calculate. And of course, how to calculate? We have to use the same logic what we use in accounts. What are the original capitals plus what are the profits in the years previously minus losses, if any, which are there in the previous years. Then we get what is the total capital. Total investment is simply total capital, and how much percentage of total capital of this business is contributed by the SSE. that percentage, that proportion is the amount of income that should be clubbed in the hands of transferor. The transferor here is SSE. Transferee is the spouse of the SSE. What transferor has done? He has transferred an asset to the spouse, and what that spouse has done? He or she has invested that amount in business, and such business has earned some income. Question now is, in whose hands such profit from such business shall be taxable? Of course, it shall be taxable in the hands of transferor also, to the extent of proportion of that investment on the total investment at the beginning of the previous year, and remaining amount will be naturally taxable in the hands of transferee, the one who is actually doing the business. So that is how the way when transferred assets are invested in business, the clubbing provisions will be little different. So that's a very important special case. So when we have the first case of remuneration received by the spouse, that was different. Now we are talking about income arising to the spouse from an asset transferred by the SSE without adequate consideration. That's what is happening. Of course, this is applicable for house property also, other properties also, both of the assets, whether house property or not, the same clubbing provisions will be applicable. Income on income is not to be clubbed. What is adequate consideration? We know that. What is not adequate consideration? Natural love and affection is not adequate consideration. And if the amount of the asset is invested in the business by the transferee, then proportionate amount of income that asset earns shall be clubbed in the hands of transferor. That is how these provisions related to spouse are contained in section 64. In general, all the provisions related to the spouse, son's wife and all minor are contained in section 64 only. So section 64 contains the provisions in relation to spouse to start with. One is remuneration related provisions, we have this. Second is transfer of asset related provisions, that is the second aspect of section 64 in relation to spouse. Now look at the application of this last thing, that is in relation to the transfer of asset invested in business. Past examination question this is, carefully read that. This type of questions can very well be expected. Mr. Vaibhav started a proprietary business on 1/4/2018. Read the dates carefully. 1/4/2018 with a capital of 5 lakhs rupees, and he incurred a loss of 2 lakhs rupees during the year 18-19. I know we should always remember that 18-19 is not our previous year. It is prior to that. Our previous year is 19-20. Even before that, when he started the business on 1/4/2018, total capital of 5 lakhs. He incurred a loss of 2 lakhs. So what will be the capital at the end of 2018-19? Naturally 3 lakhs. To overcome the financial position, which is difficult, his wife, Mrs. Vaishali, a software engineer, gave a gift of 5 lakhs rupees on 1/4/2019. So after 1 year of running this business, after incurring a loss of 2 lakhs, originally he invested 5 lakhs is his own money. So he has a capital of 3 lakhs now. Now his wife is giving him another 5 lakhs on 1/4/2019, which was immediately invested in the business by Mr. Vaibhav. Whatever the reasons may be, sometimes it is called lady luck, because of which this business has earned a profit of 4 lakhs rupees during the year 2019-20. We don't need to really go into the details of practicalities. Facts are facts which are given in the question. So in the first year of business he earned a loss, in the second year of business he got a profit. So this is the situation. 4 lakhs rupees is the profit earned by Mr. Vaibhav during the year 2019-20 under normal circumstances. Forget about clubbing and all. 4 lakhs rupees is PGBP, and 4 lakhs rupees should be taxable in whose hands? Naturally Vaibhav's hands, because he is the SSE, he is the one who is doing the business. But that is normal circumstances. Now it is not the same. Why? Because this 4 lakhs rupees is earned not only from his original money, but also from the additional money that he has received from his wife. So a proportionate amount has to be also clubbed in the hands of his wife, Mrs. Vaishali. That has to be also calculated here. What is the requirement? Compute the amount to be clubbed in the hands of Mrs. Vaishali for the assessment year 2020-21 And if Mrs. Vaishali gave the said amount as a loan, what would be the amount to be clubbed? That is the second story. First, let us understand how this has to be calculated. Of course, all this data is redrafted and again given. First, we need to write the provision. Since there is an asset that has been transferred and that asset is earning some income in the form of business, then income proportionately to the extent that the SSE has given to the spouse, it should be clubbed in the hands of SSE. Before all this, who is the SSE here? First we have to be clear. The SSE is not Vaibhav. SSE is Vaishali, because that is what he is asking also. Income to be clubbed in the hands of Mrs. Vaishali. So our subject matter is Vaishali, not Vaibhav. Vaibhav is there. Vaibhav is spouse of Vaishali as a character. That's all. But income is supposed to be taxable in the hands of Mrs. Vaishali. So that has to be first be clear in mind. This is why I told you, don't jump to conclusion that always husband will be SSE and wife will be the spouse in the case. In this case it is opposite. Wife is the SSE, husband is the one to whom wife has given support in terms of some capital contribution. So now how to treat that? First of all, 4 lakhs is their profit, that is clear. To what extent the Vaishali's contribution has been useful to the business of Vaibhav, that we should calculate. So all these logical things we don't need to worry about. Simple arithmetical calculation is proportionate amount we have to calculate. So at the beginning of the year, the word used here is at the beginning of the year, as on the first day of the previous year, how much is the proportion? What is the value of the investment to the total investment in business? So what was the value of the investment here? That is clear, 5 lakhs. And what is total investment here? Be careful. What is the total investment here? That is this 5 lakhs plus 3 lakhs. The question comes here, why 3 lakhs? Why 3 lakhs? Because originally when he started 5 lakhs, in 2018-19 he incurred a loss of 2 lakhs. At the end of 2018-19, how much will be the capital in the books of accounts? 3 lakhs. 3 lakhs plus 5 lakhs, 8 lakhs. So how much is to be clubbed in the hands of Mrs. Vaishali? Simply speaking, 5 by 8 has to be clubbed. That's what is given here. So calculate this carefully. Original capital was 5 lakhs minus 2 lakhs. The capital on 1/4/2019 is 3 lakhs plus Vaishali gave 5 lakhs. Total is 8 lakhs. So the total 4 lakhs income that has been here, 4 lakhs income earned from the business is split into 2 parts. One part which will be taxable in the hands of Vaibhav only, that is 1,50,000, whereas the part which is taxable in the hands of Vaishali, which is to be really clubbed, is 5/8 of 4 lakhs, that comes to 2,50,000. So simply the answer now is conclusion. What is the question that has to be answered? The income to be clubbed in the hands of Mrs. Vaishali for the assessment year 2020-21 is 2,50,000, that is 5 by 8. And understand 5 by 8 very carefully. 5 lakhs is what she has contributed, divided by 8 lakhs is the total capital at the beginning of the year. This word is very important to be applied here, on the first day of the previous year. So on the first day of the previous year, the capital originally was 3 lakhs plus 5 lakhs, total 8 lakhs. So 5 by 8 is Vaishali's proportion of share in profit. Don't think they are really taking share or something. No. What happens in reality, we don't care. Whether clubbing provisions applicable or not, yes. And how much proportion? 5 by 8. That's all. That's what we should do. That is related to the transfer of assets by the SSE to the spouse, and income arising from such asset shall be included in the income of transferor. And however, if such asset is used in the business by the transferee, then proportionate amount shall be clubbed in the hands of transferor. That's all. That is the essence of spouse related provisions. Second category of provisions. First category is salary type. Second category is transfer of asset type. Then third category is not a separate category. Basically this uses the word benefit of the spouse. Anyway, we understand this very clearly, because main point is this clubbing provisions will be applicable irrespective of whether the asset is transferred directly or indirectly. So for example, if somebody like Mr. A transfers the asset to a trust, these are the things that people do sometimes. Mr. A creates a trust and he transfers the asset to the trust, and he instructs the trust to pay income from such property to Mrs. A. So asset is not transferred to Mrs. A. He has escaped the section 64. But can we say that really there is no clubbing required there? We cannot say. Why? Because who is the beneficial owner? Who is the one who is receiving the income from such asset beneficially? The spouse of the assessee only. So the transfer of asset need not happen only directly to the spouse. Even if it happens to somebody else also, even if that happens to somebody else also, the transfer directly or indirectly, ultimately if the spouse is getting benefited, then such income shall be clubbed in the hands of transferor. That is the third point in relation to spouse. So essence of all the things whatever we discussed in the current session is spouse related provisions. When spouse is earning remuneration from an organization in which the assessee has a substantial interest, then such remuneration shall be clubbed in the hands of assessee. Of course, conditions apply. If spouse is not having technical or professional qualification, knowledge or experience, then only clubbing provisions will apply. What if both are having substantial interest, both are having salary received from such organization? Both of the cases, both people will be calculated first without doing the clubbing. Whose income is higher? In those hands, the the other spouse's income has to be clubbed in that case. That is related to salary to spouse. Second one is transfer of assets to spouse. Transfer of assets to spouse is about what? Transfer of assets to spouse is happening without adequate consideration by the assessee to the spouse. Then that asset is earning some income. Such income is to be clubbed in the hands of transferor, that is assessee. Is it applicable for house property also? Yes, because it is already included in section 27 as deemed owner of the property. So that is not only just restricted to income from house property. Now here it is extended to any asset. However, if that asset is utilized by the transferee, that is our spouse, that spouse, if the spouse utilizes such amount or such asset for purpose of businesses, in that case proportionate income or proportionate interest on capital shall be clubbed in the hands of the transferor of such asset. So that also is a very important aspect. Questions were asked in the past in the examination in relation to business contribution by the assessee to the spouse. That is one more important point. And the third aspect is that if, for example, there is a transfer by the assessee to spouse, not directly but indirectly. The asset is not transferred to spouse, but it is transferred to somebody else. Ultimately, the benefit of income from such asset is coming to spouse. Even in that case, clubbing provisions are applicable. So that is the third point in relation to spouse. So with this we can conclude this portion of the chapter, which is related to the clubbing of income in the hands of the assessee, and the income is actually earned by spouse, but it will be clubbed in the income of assessee. What are those circumstances? Three different scenarios we have discussed today, and we will continue with two more items in relation to the related parties we can call. One is son's wife. Son's wife is not actually a different discussion. Whatever is applicable to spouse, it is applicable to son's wife also, except that first point of remuneration. So nothing new here. Son's wife will be almost similar to that of same provisions of spouse. And minor child, yes, there are different provisions in relation to that. That we will discuss. With that, in the next session we can conclude the theoretical aspects in relation to clubbing provisions. Then we can move on to solving some problems in relation to that also. Till then, take care, stay home, stay safe. Bye bye.